What is up, everybody, on this beautiful Texas evening? It is sure cooling off in Texas, and it's cooling off in the real estate market. But is it just a seasonal thing, or is it signs that the market is starting to tip off at its peak and starting to cool off a little bit? We'll kind of get in here, and I'll give you my opinion of what I think here shortly. So go ahead and get into it. The numbers for September, the average sales price was $252,000, which is a 1.72% increase year over year. So still along the trends of prices still need to increase. Median sales price just under $200,000, which is a 4.3% increase year over year. Total sales just under $2,600, which is a little bit decreased from year over year, but I mean nothing really to worry about. Average rental price is $1,459, which is a 2.2% increase year over year. Unemployment just over 1.1 million, which is a 1.64% increase year over year. So that is great that we're still gaining employment year over year. We gained 517 jobs, which I mean isn't anything to be too excited about, but that's good that we are still employing here in San Antonio. Unemployment was a 3.73% increase year over year, with just a 0.06 increase from the previous month. So nothing really too crazy to worry about as far as unemployment this month. The month of inventory did jump a half a month up to 3.99 this month, but that is pretty typical this time of year as things cool off from the summer and we're heading into the winter time for months of inventory to increase and median sales prices to start to drop. Because if you remember, a few months ago, we're up almost at 215,000. So we'll go ahead and see how this looks over 7 years. And what I'm still looking at is this year for 2017 is you can kind of see how every year it kind of goes up and then it gradually falls off, gradually falls off. It kind of makes a nice kind of curve as it planes off. One thing I'm looking at here for 2017, it was the first year that we did not, I think it was March sales, median price did not beat February's. So we dropped back off, which is what this drop is right here. But then we shot up extremely fast up to that 215,000 a few months ago, dropped back off, went back up, and now we're heading back down. So it's not acting like your typical summer months like it has the last 5 years in a row. So that's something that concerns me a little bit and kind of makes me think that we're kind of towards the top. I did a presentation up in Dallas of over across statewide. And one thing I've started to notice is how much we've gained from median sales prices here at the bottom of the market. In 2011, we were sitting about like 150, and now we're up at 215. That's a $65,000 price increase in just 7 years. And now one thing I'm kind of looking at, wanting to try to find data on is what has our median wages been increasing? Because I don't think we've been increasing that much as our median wages here in San Antonio. So that's what makes me think that, hey, I think we're getting towards the top of the affordability and we might see it level off or get a little more volatile over the coming months and years unless we get some kind of macroeconomic situation that really kind of brings the economy down. So monthly rents, it's the same deal. You can see that we just kind of went up, peaked, slowly, gradually came back down, and we just kind of like in nice little rolling hills. But then this year it went up, dropped down, shot back up, shot back down. So even in rental prices, we're seeing some abnormalities based on what the historical data shows. So that's something that I am going to continue to kind of watch, and it makes me think that I think we're getting towards the peak of the prices of where we're at, and median wages and real wages need to increase in order to maintain these level of price increases. 20-year unemployment, I mean, we're still sitting good down here between 3 and 4% like we have been for a while. Just kind of been bounced around here at the bottom. So we'll continue to watch this to see if we start seeing spikes. And one thing I look for is how fast it went up in the real estate recession and how fast it shot up in the dot-com bubble. So that's one thing I'm going to continue to watch to see if I start seeing price increases or unemployment increases like that. I'm expecting that we'd start to see that trickle over into real estate prices not soon after. So now the next part is where to market. Same thing as it's been consistent since I started the news about a year and a half ago, is our shelf is that $200,000 price range where we jump 1 month of inventory when we go to over 200 to 250. Excuse me. And so when doing renovations, this is something to keep in mind of the price range you're in. Not to say that those aren't good renovations in those price ranges. It's just something to take into account that it might take a little longer to sell, which is why I look at months of inventory, then I look at days in market. It's like, where is the inventory in the city, and where are people buying, and in what price ranges? It's not the same thing I do it by zip code as well. So what's my competition level in the zip code that I am looking for property in my renovations, rents, everything like that. So these are your top 10 zip codes that had at least 30 active transactions on the MLS last month alone. It's no surprise to see all of them but one under 200,000. But these prices really have increased over the last year and a half, to where previously you were seeing a lot of them around like the 150 range. But now you got 189, 188, 215, 199, 187, 193, 180. So those prices are being pushed up. And even though median sales price, in my opinion, might kind of level off a little bit, I would bet to continue to see all the zip codes that have the sub 200,000 or sub median sales price to continue to have upward pressure pushing those prices up. So if you're picking up properties in that 140, 150, 160, I bet those prices would continue to increase till it gets closer to the median sales price. So the worst zip codes, this is the same deal. This is where there's at least 30 active transactions and the highest months of inventory across the city. But we are still in a very strong seller's market here, so there's still a lot of pressure for prices to still continue to increase. Because even into the 400,000s, we're getting our balanced markets right at 6 months of inventory. So even amongst our worst zip codes, we're still pretty high in getting into that balanced market. So we're still in a very strong seller's market here in Texas. But I think here in San Antonio, we're starting to hit a little bit of an affordability issue with prices to continue to increase the way they have in the past above those median sales prices. And when I did my research on the other major metros, I saw kind of the same thing in Houston and Austin, to where their year-over-year price increases is starting to shrink. Where in 2011, 12, 13, we were seeing double-digit price increases year-over-year, and they're starting to shrink down, getting back down to the normal levels of 3-4%. So it's on a downward trend as far as prices over year. And next month I'll make sure to include that in my market report so you guys can take a look at that. Dallas is just an anomaly. It's continuing just a double-digit price increases year-over-year. So it's really moving in Dallas, and it's the hottest market in Texas right now. So that really kind of concludes this month's wrap-up of the San Antonio market update. If you guys have any questions, email me at john@prymehomes.com. Other than that, we will see you guys next month. Take care. Happy investing.